If you don't count FPOs and rights issues and other equity investments, this will be this year's first IPO. I'm talking about Rossari Biotech from the chemical sector, a specialty chemicals manufacturer that's going to be listing at a 30 times price to earning valuation within the desired price band. And the price band is 423 to 425 rupees per share. It's around a 490 to 500 crore issue, and upon listing, you'll have a 2,200 crore market cap. Now, the FY20 PAT was 65 crore and the FY20 revenues were around 600 crore. But what's interesting to note is just 2 years ago, if you took a look at those same numbers, the profit was 25 crore and the revenue was something like 300 crore. So you've doubled your revenue in 2 years. At the same time, you 3x'd your PAT almost. So that's why it's getting this 30 times price to earning expensive valuation. It's also a high margin business, so it's not a commodity business at all. EBITDA margins are 17% plus. The clients are also well diversified across textile, food, chemicals, and other segments as well. And they're all large marquee MNC kind of clients as well. So, typically for a good chemical company, and I'm talking people like RT, PI Industries, Galaxy Surfactants, Fine Organics, that's who you would compare Rossari Biotech to. You have fixed asset turnover ratios of maybe 2 times, maybe if you're very good 3 times. That means you invest 3 rupees and you're able to maybe, let's say, take out 6 or 9 rupees from it. If you invest 1 rupee, you can take out around 2 to 3 rupees from it. In the case of Rossari Biotech, if you invest 1 rupee, you can take out 6 rupees from it. The fixed asset turnover ratios are 6x. So what that tells you is that it's a high return on capital business. It does not need heavy capex to generate a high revenue, and they're specialty products. What's also very interesting here is that effluent treatment has become a big problem for certain chemical companies. How are you dealing with your hazardous waste substances which are coming out of your factory? That is what has stalled the chemical operations in China, because they weren't keeping a check on this. Rossari is a zero hazardous effluent waste facility and company. So there's no hazardous waste products generated. Furthermore, all these products are import substitution products. So they're currently being brought in from other countries overseas, and there's very few players over here locally who have a know-how. So if you look at a Fine Organics or a Galaxy and just see how they've performed from IPO, people are building in similar expectations here for Rossari Biotech. The anchor book had names like ADIA, HDFC, ICICI Pru, Axis. So participation from leading financial institutions. The proceeds of around 400-500 crores will go towards deleveraging, funding the capacity, which is going to be doubled by the end of this year. And let me say, currently the management says they're operating at 100% utilization. So the second that new capacity comes on stream, it can probably get filled very quick. So these are the positive triggers. Promoters are 2 technocrats, IIT grads, and they pride themselves on low cost capex and generating high revenue and returns. And it looks like this issue is going to be eaten up and should be quite a stellar listing.